In banks, there are typically three main types of analysts. Counterparty credit analysts focus on evaluating the risk of lending to a specific borrower or institution. They prepare detailed risk reports, recommend whether credit should be approved or limited, and sometimes even suggest the exact exposure the bank should take. Their responsibilities often extend into decision-making, where they authorize credit limits, approve exceptions, recommend guarantees or collateral, and coordinate with legal teams to ensure documentation is correct. With modern regulations like Basel requirements, they also spend a lot of time ensuring compliance and policy alignment. On the other side, fixed income analysts specialize in bonds and debt securities. They study whether a bond is undervalued or overpriced and help decide whether to buy, sell, or hold it. And equity analysts evaluate banks from a shareholder's perspective, analyzing profitability, leverage, and return on equity to guide investment decisions. To perform these roles effectively, analysts rely on a strong combination of quantitative, qualitative, and research skills. Quantitatively, they work heavily with numbers. They calculate financial ratios to assess liquidity, solvency, and profitability. They study metrics like return on equity, leverage levels, and asset quality to understand how strong or weak an institution really is. Statistical tools such as sampling, correlations, and confidence levels help them interpret uncertain data and make informed conclusions. They also analyze loan portfolio performance and track macroeconomic indicators. But numbers alone are never enough. Qualitative judgment plays an equally important role. Analysts must evaluate management quality, governance standards, and the overall reputation of the institution. They assess whether the bank has a strong risk culture and disciplined credit processes. They check if earnings are consistent and financial reports are reliable. They consider regulatory pressures and policy risks that could affect operations. In many cases, experience and sound judgment matter just as much as calculations. Alongside these skills, research becomes the backbone of good analysis. Analysts usually begin by understanding the overall banking sector structure and regulations. They compare large banks first to build benchmarks and then evaluate smaller banks relative to those standards. They gather primary research through meetings with management, due diligence, and sometimes site visits. At the same time, they rely on secondary sources like rating agency reports, industry publications, and external research to strengthen their conclusions. Of course, all this analysis depends on high-quality information. The annual report is often the starting point, offering insights into strategy, performance, and management's discussion of results. The auditor's report is critical because it tells whether the financial statements can be trusted. Financial statements themselves, including the balance sheet, income statement, and cash flow statement, help measure the bank's financial position, profitability, and liquidity, while capital statements explain changes in equity. Analysts also use the bank's website and press releases for updates, and they constantly monitor news, market data platforms, and pricing services to track mergers, regulations, and security prices that could quickly change risk levels. A particularly important piece of the puzzle is the auditor's opinion. When auditors issue an unqualified or clean opinion, it means the financial statements fairly represent the bank's condition, which is reassuring. A qualified opinion signals that there are some exceptions or accounting concerns. An adverse opinion is more serious, suggesting the statements may not be reliable at all. And a disclaimer means the auditor couldn't gather enough evidence to form an opinion. Beyond audits, prospectuses, regulatory filings, and rating agency reports provide additional independent and risk-focused insights that help analysts see the full picture.